This evening lecture is about decision making and control. Please ensure that you switch off your microphone. Thank you. Okay, so the learning units for test 2 is learning unit 5, learning unit 7, and learning unit 6. So learning unit 5 is budgeting and standard costing. Learning unit 7 is relevant costing and CVP analysis, which includes break even. Then learning unit 6 is nature and classification of cost, variable and absorption costing, ABC, and transfer pricing. As you're aware that this lecture is just to highlight some of the topics and that you should be familiar with your complete material and not just rely on these slides for the purpose of preparing for test 2. So the topics that we'll be covering today is quickly going to look at exam technique. We've got special order, a long-term financial factors that is just going to look at some discussion. Nature and classification of costs, fixed and variable, long-term versus short-term. We've also got CVP, break-even point, standard costing, but we'll only look at material variances, ABC, brief discussion, transfer pricing, and then number 9 is going to be for homework. That is performance management that we've done already under strategy. So you'll be just revising that before test 4 and before the exam. So in terms of exam technique, make sure that you're on time, be ready at your computer, know that everything has been arranged and that you are there in time. So you're going to have download time, you're going to have reading time, and then you're going to have time to answer your question. So make sure that you stick to these time limits. As you read, it's important that you make notes and highlight things that are important so that when you come back from reading the required, you know where to go. You know what did you already identify and which section it relates to. So we'll be practicing that as well today. And then read every word of the required carefully and answer the question. I often tell people it doesn't help if you've got a perfect answer, but it's not the question that we've asked you. So make sure that you're answering the required. Then remember, don't go over your time limits for the question because every question you need to answer to earn those marks. So if you steal time from the next question, then you're going to suffer in the next session. You won't be able to complete that section, and perhaps that would have been an easy section that you could have earned a lot of marks on. And then, very important, keep calm, trust what you know, and don't go over your time. So this exam technique is the same that you'll be doing for the test as well. So you need to, when you're writing a test, be as confident as you can be, stick to your time, and then stay calm. There already, if you've done that, you're already a long way on the successful journey for that test or that setting. Okay, further, when you're doing practice questions like we're going to do this evening, make sure that you remember where you have gone wrong. So make notes of your mistakes. After a test, mark your attempt because next time you don't want to make the same mistake again. And that will help you when you're doing revision for the exam, for example, and that will make you go much quicker. So in general, remember, we've always got some communication marks available. We don't write an SMS style for us, only recognize the abbreviations, write neatly, have a nice layout because there'll always be a mark available for that. Okay, in this case study is the rise up question. It was a 100-mark question, but we'll be looking at certain sections of this question. So Rise Up is a leading producer of a wide range of dough types They've got a diverse customer base in a competitive market. Okay, and that, the yellow, we're saying that's important for our strategy. Okay, so this is the kind of note that I would be making. They have 5 autonomous divisions, and each manager is responsible for their planning, directing, and controlling. And they all do their own material ordering, machine setups, etc. So this part is then important for performance. But remember, we said this part of the question is going to be for homework and for revision for the exam. But what's important here is when you do want to determine someone's performance, they have to be in charge or controlling that cost. Otherwise, it won't be fair to base their performance on a KPI that they have no control over. Right? Then the question goes further to say these activities are not necessarily volume driven and may vary per product type within each division. An in-depth investigation into cost drivers is yet to be performed. So this tells us it is likely going to be something to do with ABC, activity-based costing, because we are telling you that these costs that we've allocated are not necessarily volume driven, which would be the traditional costing method. But we're telling you that there are cost drivers, so that makes us understand that we've got potentially ABC that we need to look out for. The question further tells you that they invest a lot into R&D because remember they're in a competitive market and that will give them the competitive edge. Okay, so they need to look at the customer food trends and quality management. Okay, that's very important for them. And then the RU's board of directors decide on which R&D projects they should implement, and that's part of performance. Right. So the first question, I'll go back to the previous section. So this question that we're going to do part A, we say determine the sales price per box. Sorry, so the question says, I'm just going to repeat that, determine the sales price per box of mozzarella pizza bases that they should charge for the Naples order. So even just from looking at the required, I can think, okay, it's a sales price likely for a special order. Okay. So let's go to the information. So we're telling you this is now, in this question, there are different divisions. This is the pizza division. They produce 3 different types of pizza. The one is plain, the one is wheat, and the other one is rye. They package it in 10 in a box, and then it's the same production process and time, irrespective of what type of pizza they are making. So it takes them 3 minutes to mix, 5 minutes to knead, 22 minutes to rise, and 3 minutes to pack. So we're telling you that the mixing and the rising, which is the pink, is machine operated. So that is the pink, and that is then together 25 minutes. The packaging and the kneading, that is then manual labor, and that is 8 minutes. Okay, so here I would make a note for myself to say that it is 8 minutes. 8 minutes for the kneading and packaging, and 25 minutes. Sorry, 25 minutes for machine operation. Okay, so we've got a budget to produce 720 boxes. Okay, so this is what we're currently producing. Then we're telling you that this 720 units that we are producing is at 75% of the maximum machine hours and 98% of the maximum of the labor hours. So that tells us, yes, we still have availability in terms of machine hours and in terms of labor hours. So we want to know, or we can go and calculate then in the next step, what is that maximum capacity that we have. Because in our special order, we want to know if there are any constraints. So we just remember that, tie it in the back of your mind that you don't forget. We need to check the maximum. Okay. So we tell you, this is now more detail about the Naples special order. We tell you that they want 10,000 boxes of mozzarella. They want to sell it in their restaurants, okay? And they want it within 1 month, okay? So the production process of mozzarella that they are requesting is the same as the one that we're using for plain pizza bases, but the tomato and mozzarella is going to cost me R8 extra per box. And I'm going to get temporary workers to help me with this. And I'm going to get 6 temporary workers at 120 Rand, 120 hours and 35 Rand per hour. And they're going to help me to make my pizzas. So you'll see this will then be included as my relevant costing that I'm going to use for my special order. So they've also told me that they've decided they want a sales profit margin of 30% based on the total relevant cost. Okay. So we've done the required, and then always remember to calculate your time, that you don't exceed your time. Okay. So the easy ones in this part that I would start with is I would, for example, say, okay, so I've got 10,000 units that I'm going to, it's going to cost me R8 per unit. And then the other, or 80,000 if you're doing it on a total basis. Then my contract workers, I'm going to have 6 of them. They're going to charge me 35 Rand each at 120 hours they're going to need. So that's how I can calculate my contract workers. And then I can divide it again with the 10,000 to get it per box. So there's more than one way of doing it. You can do it in total and divide at the end, or you can divide it per unit as you go along. Okay. So now we've done 2 of the easy steps. I've made a mark here for you already just to remember when we're going to be doing the selling price, because we told you that it's a 30% margin. Then we're going to use, let's just go there. We're going to use the cost equals sales less margin, and that is the method that's going to be 10 times 100. What you want is the sales price divided by what you have, which is the cost over 70. So make sure that you revise what is the difference between markup and margin so that you don't get confused here. The next, okay, so now we've done the easy parts. And the second part that we'll now do is we'll calculate the variable cost of plain, and then we'll do the lost contribution, as those are the more difficult parts of the question. Okay. So this is the information that we've got here for plain, wheat, and rye. So I'm just, because we've a bit constrained for time, I'm going to show you just how to calculate one of the products, because I know that you can calculate the rest yourself. So we've got the sales value of plain wheat and rye. We've got the variable cost of plain wheat and rye. We've got the fixed production cost of each. And then we tell you that we sell 5, we sell 2, and we sell 1. Okay, so in total, we're selling 8 in our mix. Okay. So to get the variable cost that I'm going to put into my special order cost, I'm going to take that of plain. Okay. So first step that we need to do is, we know that we normally produce 720,000 units. We know there is 8 boxes of pizzas, and we know that plain, in terms of the mix, takes up 5. And that's how we know that we are expecting to sell and produce 450,000 of plain. Okay. So now we've got the quantity. We've calculated the quantity. So now we're going to calculate what is the sales price and what is the variable cost. So this variable cost, we just take it from the table that we've got here, and we divide it, the sales price and the variable cost, to get the per unit sales price and the per unit variable cost. Okay. Then for the lost contribution or the limitation, we're going to do the contribution per unit, which is then my sales price less my variable cost, and that's going to give me my contribution. But now first I'm going to use my variable cost, because remember in the question it said that it's produced the same way as plain, except for the additional 8 rand. So we need to remember to add this variable cost that plain incurs. Okay. All right, thank you. So that's where we've got the variable cost that plain incurs, or the 24.10 if it's per unit. But it's very important that you don't mix the total basis and the per box basis. Okay, so now the next step that we're going to look at is there a limitation? Well, we know that we need to test for a limitation. There's two things that could potentially be causing a limitation for this question, and it's in this question, in the slide. So is there anyone of the students that will stick up their hand or say what is the two limitations that could potentially be there in this question, or just put something in the chat if Ms. Venter will assist with. I see there's a student's hand raised. I think it's Brendan or Brandon. Will you please go ahead?
Hi there, yes, okay. Please. So from what I can observe, it would A, be the labor hours, since you're already at 98%
yes.
Labor hours, and the second one would be the amount of product you can actually create, looking at the time allocation. If I'm right there, I'm not sure if I'm right that one.
Yes. So the two, like you said, that you can see on the slide, the 720 units that we are making. We can do that. We've got capacity for the 720. Our laborers, in terms of labor hours, are at 98% of their capacity. So there's a potential constraint there for the special order. And then the same with the machine hours. We're at 75%. So excellent. Thank you for sharing that. I appreciate it. Thank you.
Thank you. Brendan.
So we're going to test for both. So in this question, we've calculated it. You can do this machine hours, you can do for homework, because at the end we find there's no limitation for machine hours. Okay, so I'm just going to work with the one that does have the limitation, which is then labor hours, which you won't obviously know in advance, but you can just do then machine hours on your own time. So we know we've got 720,000 units they were able to produce normally. Okay, and we're already at 98% of our capacity. So now we determine that our laborers can at maximum make 734,694 boxes. Okay, but now we want to know how much time they're going to take. So that's why we then take the time that in the scenario we said the 8 minutes that they use for labor hours, which was the kneading and the mixing, if I remember correct. And then remember, we gave you the 720, that's per annum, but they just want 1 month, so we need to divide it with the 12. And that's how we get the hours then per month. Okay. Now, this is the first step. So now we know what we've got available to make, the number of hours we have to produce pizzas in. Now we're going to calculate how many do we need in a normal month. So normally we need the 720. We take again the time that it takes, 8 minutes, and then we get the 96,000 hours. And then again, remember this was for a year. We need to make it for a month, and that is 8,000. So we've got available for the special order 163 hours. Okay. But we want to make 10,000 units. And to do that, and each needs 8 minutes, we're going to need 1,333 hours of labor. And we only have 163. So that's why we know we've got a shortage in this case. Okay. Then the next step that we did, remember I showed you how to do the contribution for plain. So we calculated how many of each we're going to make. And sell. So we're planning to produce and sell 450,000 plain, 180,000 wheat, and 90,000 of rye. So that we've used then to calculate what is my sales price per unit, what is my variable cost per unit, and then the difference is then my contribution. So if I can ask if there's a student that will maybe again help me out here and say, which one do you think we should give up? Should we give up plain? Should we give up wheat? Or should we give up rye? If there can be a hand or a student maybe saying in the chat. Okay, excellent. Namira, please go ahead.
I think we should give up plain because it has the least contribution per unit compared to wheat and rye.
Excellent, fantastic, yes. Like Namira said, the one with the lowest contribution would be the one that you would sacrifice. So in other questions, you'd sometimes look at you'd want the highest contribution, but if you have to give something up, then obviously you don't want to give up your most profitable product, which in this case would be rye. So we are happy with that. We are going to give up plain. Thank you for that. I appreciate it. So let's do the next one. Okay. So we know there's a time constraint of 1,170 labor hours that we've calculated. So how many plain boxes is that? That will then translate, because we've got the hours, but now we want to know how many boxes. So then that translates to 8,775 plain boxes. So now that is how many pizzas of plain I can't make, and I'll have to then give up the 25 Rand 90, which is that lowest contribution that we've calculated there. So that gives me a total of 227,000. Okay. And then that is what we then slot in to our calculation. So we've got, and then if you're doing it per box or you're doing it per total, just make sure that you stick to what you're doing. So if you're doing it in total, remember that you need to divide it at the end by 10,000 because we want to know how much you can sell a box for. Okay. So we've got our last contribution, which is that total amount that you've then divided with the 10,000 to get to your per box. We've got the variable cost of 24.10, the additional toppings of 8 Rand, the contract worker fee of 2.52 Rand, and then the total relevant cost that we then use at a sales margin, and we get a total sales price of 81.93 rand. And then that is it for part A. Is there any questions on part A?
Hi, ma'am. Hello, ma'am.
Yes.
Just asking with regards to that limitation that that you said that you're gonna skip. If say in an exam that we encounter such whereby the limitation is not a limitation at the end, are we gonna receive marks for that?
Yes.
For calculating whether it's a
Yes.
limitation or not?
Yes. Yes.
Okay.
Yes, there's definitely marks available. In this case, I just didn't repeat it because it's the same type of calculation, but there's definitely marks available. And even if that product then also didn't have a limitation, because how would you know there's no limitation if you didn't calculate it? So you have to calculate it. If there's a potential for a limitation, then you would have to calculate it, yes.
Okay,
Yes.
thank you. Just the last question with regards to the fourth step that you have right now on the screen. Would you recommend for us to use the total column or the per box to divide it per box, and how are the marks gonna be allocated if we divide it per the line item that we're gonna be using, like the loss contribution, you divide it while you go?
I think the most important is that you don't mix and match. But in this question, the question did say per box in the required. So I would think it's more safe to use the per box from the start. But then, yeah, I think that's the best way, especially in this case, if the required asks you per box, I think it's safer to do it that way. And then you don't want to forget then dividing it if you're doing it on a total basis with a 10,000. But it should come to the same answer. So if you don't forget anything, you should have the same answer. But if you have to choose, I would do the per box one.
Okay. Thank you very much.
Pleasure. Okay. I'm going to continue with part B. Okay. I'm just quickly going to run through this question. So describe the key long-term financial factors that pizzeria should consider when setting its sales price. So the purpose of this discussion is just to highlight some of the things that I want you to think about when you're doing a special order, and also when you're trying to do discussion types of question. What is the kind of thing that you need to think about, where you should be heading with your discussion, and what type of answers we are looking for? So obviously we won't repeat this question, and but there's just some principles here that I think you can benefit from. Okay. So when you're considering a special order in the long term, you'll think about something like, will the client come back to us again? Will they do repeat orders? So then let's say they're going to do repeat orders. We can't set the price too low because they will expect us to keep on selling at that low price. And in the long term, we need to make sure that we've covered all of our fixed cost. Okay, so in the short term, yes, we can ignore fixed cost, but in the long term, we need to make sure that it's covered. And then something that you also need to consider is, in most cases, what is going to happen to your market share? Will other customers also be interested in buying this mozzarella pizza? Maybe you can extend your market share. Maybe you can diversify your product range. Maybe you're going to be able to utilize your asset better, because remember, for example, the machine had 25% spare capacity. So maybe going forward, I can use the machine, utilize the machine better. Then we can always remember it seems like they are price setters. So in a question, also look at the scenario. Do you think this company is a price setter, or do you think they are a price taker? And then in the long term, you've got to always consider what is going to happen in terms of inflation. You're also going to have to factor that into your long-term price setting strategy. Okay, so that was quite an easy one. Is there questions on part B? Okay, I'm quickly going to go then over to question C. Part C of the question, you'll see, okay, so this is the bread division. The bread division sells two types of breads, white and brown. And they want to know what is the maximum short-term and long-term cost saving if they decide to outsource their selling and admin function. RU Management provided you with this information about the selling and admin cost at different sales levels. So I want to know, is there a student that can maybe tell me what kind of question are we looking at? Why am I telling you, why am I giving you this different sales volume information? Yes, please go ahead, Sarina. Unfortunately, I can't hear Sarina. Is there another student who wants to go for it? Hello? Yes, I think it's Vimbai. I'm not sure if I'm pronouncing it correct. Please go ahead.
A bit bad.
Sorry for that. Yes, unfortunately, I can't hear you. Do you want to try and say quickly what you think it is?
Is it so we can use the high-low method? Using the sales
Yes,
volume and the total cost.
perfect. Yes, you spotted it there. Fantastic. Thank you for that. I appreciate that. Okay, so yes, that's what it's about. It's the we're going to look at a mixed cost. So we're going to look at the high and the low in terms of volumes, and we're going to split it between the fixed and the variable cost because in theory, we're able to quickly save on our short term or our variable cost, but in the long term, when we're outsourcing, then we're looking more at our fixed cost type of expenditure. So looking at this required, you'll see it says calculate and discuss the maximum short-term and long-term cost saving if they outsource their selling and admin function. So this is also, again, it's got a calculation section, and then it's also got a quick discussion time. So we then take the high sales volume. I'm going to show you white, and then you can do brown as revision. So we've got the low level of white. We've got the high level for white. The difference in terms of quantity is a million. Then we do the same with the cost. The 700 is the low. The 830 is the high. The difference in cost is then the 130,000. So then to calculate the variable portion of the selling and admin cost, we take the 130, which is a cost divided by the quantity, that is the movement, and that gives me my 13 cents there for white. Now I want to know what is my fixed cost portion. So I take the total. I'm taking you can do it either with a high one or the low one. It comes to the exact same amount as long as you don't mix and match quantities. So we've got the 830, which is the highest amount. And then we multiply it with the 4.5 million, the variable cost of 13 cents. And that gives me 185,000, and the difference between that gives me then my fixed cost of 245,000. So you're going to retrench some people. And then what else is going to happen? Then you're also going to pay something for this outsourcing fee. It's not going to come for free. So you've got to consider then how much will you be paying for that. So what we can say is normally our variable cost is something that increases per unit that you sell. So let's say it costs you selling and admin cost. It costs you you print one paper per product that you sell. That costs you 10 cents, and that's a variable cost. So yes, immediately, if I stop the selling and admin, I will be able to save on that 10 cents that I'm paying for printing a document attached to it, for example. Then in the long term, if I'm closing down the selling and admin function completely, I'm going to not have the fixed cost that associate with it. So I'm not going to pay rent for the building, housing, the selling and admin staff. I'm not going to have the selling and admin staff anymore. But then again, like we said, we're going to have the retrenchment cost. Does that help?
I think it does, ma'am. Just to reiterate, the principle is that when you outsource some function, in the immediate term, in the short term, the variable cost will be saved, and in the long term, because you'll be able to perhaps also dispose some of those fixed assets that were associated with that function, which is outsourced, then you will also save on the fixed cost. So that is the principle here, is that in the short term, variable cost will be lessened, and then in the long term, fixed cost might also be reduced if you outsource.
Yes, that's the idea.
Okay. Thank you very much, ma'am.
Pleasure. The next section that we're going to do is cost volume profit analysis. And there we've just got some of the formulas there for you. So when you're looking at break-even point per unit, remember, then you've got your fixed cost and you look at your weighted average contribution per unit. When you're looking at break-even sales revenue, then you're looking at your weighted average contribution margin. Okay. Know also what is the margin of safety and then how to calculate that. So how safe are you in terms of the sales that you've got, in terms of how far does it exceed your break even. Then contribution margin is just your contribution over your sales. So just make sure that you know these formulas. Okay. Then we're going to look at a break-even point. So what is fun about the way this question is normally you are asked to calculate a break-even. But in this question, we told you it was calculated. We tell you that this information that we give you here, it's accurate. But we tell you that we've recently appointed someone from a French pastry school. And she's used her culinary, which is her cooking skills, to set up the break-even point. So what we are telling you basically is that she's done it wrong. And then in the required, we'll ask you, okay, what did she do wrong and how do we fix it? But we don't want you to redo it. We want you to know how to redo it in order for you to tell us what has happened incorrectly here. Okay. So this is then the cookie division. Okay. This is the information that they've given us for the budget, and that we can assume this information is correct. So we've got sales, quantity of chocolate and vanilla, and in total. So from the start here, we can see there is more than one product. Okay. we've got more than one product that we're looking at. We've got production quantity, we've got our machine hours, we've got our selling price. Okay, so remember the selling price. Then we've got ingredients and packaging material. We've got our variable production overheads, variable selling and admin cost, and then we've got fixed costs. So this 3 costs is our variable cost, and then we've got our fixed production overhead cost, and we're telling it's from a shared production line, and then we've got our fixed selling and admin cost, and this is then our combined fixed cost. So in this required, we ask you, look at what she's done, tell us, identify the error and describe the correction. We don't want you to recalculate. And like I said, remember, there's always a communication mark, and make sure that you do it in such a way that you can earn this mark. So can anyone tell me, in terms of, this is what she's done with her fixed cost. So she's taken her fixed cost and she's allocated it between chocolate and vanilla. Can anyone tell me, was she supposed to do that? Obviously, if you see all the crosses, no. Obviously, she wasn't. Ms. Marzon Swart, will you tell me what you think she did wrong and what do you think she was supposed to do?
Hi, Ms. Combrink. I think when there's more than one product, you're supposed to use a weighted average contribution. So you can't allocate the fixed production overheads or the fixed selling to the 2 products. You have to use the total fixed production cost and the total fixed admin and selling cost, and then divide that by a weighted contribution for the 2 products.
Excellent. Thank you for that. Yes.
I think you're accidentally muted.
Thank you. Yes, thank you for that. I appreciate that. Okay, so when we're looking here, we've got this fixed cost has been split between chocolate and vanilla. So when we're looking at the fixed cost, we want to take all the common fixed cost and we want to allocate it not to a product. We want to keep it in total. So we don't want to split it like Ms. Naidu has done in this question. We want to keep all the common costs together because chocolate and vanilla share in that cost, and to combine they have to make sure that they cover that cost. Okay, then this excludes then specific fixed costs that only has to do with chocolate and vanilla separately. So if it is, this is common, so this is shared costs. So that you keep in total. Okay. Okay, so the error, yes, she split it. What was this at the bottom is what was she supposed to do? She was supposed to keep them together, add them up, and get the 40 million there. Okay. The next part that she did, she called it calculating the production gross profit per product per bag. Is there anyone that can tell me what she did wrong in this case? Now, Mira, please go ahead.
She calculated the gross profit, but instead she should have calculated the variable cost, the contribution per unit, by taking the selling price and then deducting the variable cost from it. So even the fixed selling and admin cost should not have been deducted there. She should have only deducted the variable cost from the selling price.
Excellent. Yes. Yes. Fantastic. Okay. Thank you for that. Yes. So she was supposed to calculate the contribution and not the gross profit, like you said. She's got there correctly the 85 Rand, the selling price. She's got the 28 Rand 30 correctly, the variable production overhead, but she forgot about the variable selling and admin cost to deduct that, because it should be all the variable cost that she deducts to get to the contribution. And also, like you've said, the fixed selling and admin costs should not have been there. So this should have also then been the contribution and not the gross profit. Okay. So this is okay. And then what she further did when she did the weighting is she used the incorrect quantity. She used the production quantity to weight them. So we don't use, because we want to know how many units we should sell to break even. So we have to look at the sales volume, the budgeted sales volume. So we're not going to look at production volume to do the weighting for our break-even point. We're going to look at the sales volume. And that's what she did incorrectly here, is she used the production volume instead. Okay. Then just based on her wrong calculation, you'll see this was rounded up, but this one she rounded to the nearest unit, and that is incorrect. You need to round it up, because if you want to break even, you can't sell 0.37 of vanilla. She will have to sell a full vanilla. She can't sell 0.37 of vanilla. So it's important that you do round up and that you right there round it up. Okay. So remember, never do 2 break-even points when you've got a sales mix, when you've got something like chocolate and vanilla. Don't do 2 break-even points. Don't split, in other words, your fixed cost. You do 1 break-even point, and at the end, you'll split that up using your weightings. Okay. Was there any questions up to here? I'm going to then continue to the next part, which is the standard costing. And we're specifically looking at material variances this evening. But remember, there's also your fixed overhead variances and your sales variances that you mustn't forget about. Okay. So for standard costing, when we're looking at standard costing, remember our standards already incorporate our normal loss. The abnormal loss is what we account for as part of our variances. Okay, so if we're going to have a normal loss, let's say due to evaporation, we're going to have a 2% normal loss, then we already incorporate it into our standards because we're expecting it. So when we do our variance analysis, it's not unexpected. No one needs to account for something that we did expect to happen. Okay. So we're going to do the standard costing for planning purposes, for controlling cost purposes, and then to evaluate the performance of management. And that is then where we come back to learning unit 4 that did performance. So that is a nice link between, for example, standard costing then and performance management that we did in learning unit 4. Okay. Okay, so this is a question that has to do with standard costing material variance, and we're looking at price variance, the mix variance, and the yield variance. And we're not going to do this discussion about performance. You can do that for homework. And then at the stage of this question, it was during COVID, so there was a lot of focus on COVID. So at least now we slightly less focused on that for the moment. Muffin produces and sells pre-mixed bags of 1 kilogram each. This premix consists of wet and dry ingredients. Okay, so my wet ingredients, that is my eggs, my milk, and my oil, and my dry is my flour, my salt, and my flavoring. So we tell you that we've got a 2% normal loss. So that 2% normal loss, like I said, we're going to incorporate that into our standard because we expect it to happen. Okay. We tell you that inventory is held at standard cost. So this is very important. When you read that inventory is held at standard cost, you have to make a note of that. And we tell you that the markets for wet and dry ingredients. So when I'm buying these ingredients, it's a relatively stable market. We've got a new divisional manager from the 1st of September. And she decided to change ex-suppliers to her aunt, who she grew up with. She said that she believes the quality is going to be fine and that she doesn't have to report it because she believes that the price is going to be better and the quality is going to be fine. But from an ethical point of view, when you read someone not reporting something like a relationship to a supplier, you need to see some red flags raised there for you. Right. So like I said, we're doing inventory material. And now for the price variance that we're looking at, it's important that we saw the question said inventory is going to be held at standard, because you need to see, is inventory held at standard or is inventory held at actual? So this question, inventory is held at standard. So we're going to then use actual quantity purchased. So if we had inventory held at actual, we would have used for the price variance actual quantity issued to production. Okay, but now we are using the purchased quantity. Okay. Okay, this is just some background information. The first part of the question that we're going to be looking at is going to be the price variance. So we've got our wet ingredients price, we've got our dry ingredients price. Here we've got the budget information, and here we've got the actual information. And very important, when we're doing the price variance, the two things that we cannot do it without is the difference in prices. So that is a starting point for you. Okay, so we're going to compare the budget and actual prices. Then we've also told you that we're keeping inventory or holding inventory at standard. So then we know we're going to use wet ingredients purchased and not issued. Okay, so we're going to use this quantity for our price variance. So like we said, we've got the actual costs and we've got our standard costs. And then the quantity that we're using is the actual quantity purchased. So you'll see when you look at wet ingredients, for example, R4.90, that it actually cost us for the tip eggs, for example, is less than the R5. So yes, it's favorable in terms of wet ingredients. Dry ingredients, on the other hand, cost us actually more than we budgeted, so it's adverse. So combined, we've got the wet favorable, dry adverse, and combined, we've got an adverse price variance of 313,000. Is there questions about the material price variance? Okay, I'm going to continue. Oh, yes, please, go ahead. Now, lady.
Can you hear me, ma'am?
I can hear you.
Okay, my issue with standard costing, it's when I was looking at solutions, when I was attempting question, like when you round figures before the final answer, you're going to get a different answer, maybe with a difference of like 5,000 ranks or 8,000 ranks, which is very material. And the solution doesn't incorporate that. So what is the best way when it comes to calculating questions with regards to standard costing?
Okay, that's a good question. Thank you. Okay, so whenever there is, for example, a rand amount, you must always keep the cents to the nearest cent. So that's 2 decimals. Then in terms of quantity, in this case, we've given you the quantity, so there wouldn't be a variant or a difference there. But let's say, for argument's sake, there in a later calculation, especially maybe with the mix and the yield, there will be some rounding differences. So even though it's not on the memo, we can easily see if the student did the right calculation. So we do allow limited rounding differences. So we don't want to make incorrect rounding differences, but there is sometimes rounding differences that do occur because of, we round this amount to 2 decimals, you rounded to 3 decimals, or didn't clear your calculator and continued. So we do mark, in those cases, we do mark with that limited rounding differences, but we don't set up a memo for the variations of rounding. We just allow for limited rounding differences in that case.
Oh, okay. So I'll get a full mark in other words.
Unless if it's incorrect, or if you've rounded it, let's say clearly incorrectly, yes, then you should have get most marks, yes.
Okay, because I'm saying this because with regards to activity 5.1, I didn't have to round off until the very final last answer. So I kept all my decimals as they are calculated till the final answer. Then I would get the memo. If not, it was actually a total different answer. Yeah. But the thought process, the principle, everything was the same.
Yes. Yes. If that is the case, then you would get the marks, yes.
Okay, thank you.
Pleasure. Okay. The next part is going to look at let's just discuss quickly the material price variance. So looking at the price variance, yes, we saw a favorable variance in terms of the wet ingredients, which is the eggs, and it's likely because she bought from her aunt. So even though she thinks the quality is fine, maybe there's an issue with the quality of the eggs that she bought, and it's maybe not good negotiation skills. Okay. And in a stable market that we told you, she's now paying R1.50 more for the dry ingredients. And as the market is stable, that is an indication possibly of poor negotiation skills. Okay. So in terms of standard costing, we're going to look now at the material volume variances. We're going to look at the mix and the yield variance. So in this question, for example, we've got our wet ingredients, which is our egg, our oil, for example, and our dry ingredients. Okay. So I'll show you now. There's a split between the products. 40% of what goes into making my cake is going to be wet. 60% is going to be dry. Okay. And then in this question that we're going to do, we also know that there is a 2% normal loss. Okay, so we've got to put in extra to accommodate that normal loss. And like we said, we put that into our standard when we're setting up our standard because it's a normal loss and it's something that we expect. Okay, so in this question, we've got again the budget and the actual. We now know also the standard cost. So we've already used the actual cost when determining the price variance. We're now looking at the budgeted or the standard cost. We're going to use further when we're doing our material mix and yield variance. We're going to use the standard price. Then we're going to, when we're looking at the material mix variance, we're going to look at what was our actual issued, which is the 145 and the 210. That gives me my 355. Then we're going to take that 355 to calculate the actual kilogram issued in the standard mix. And that we're going to do when we're calculating our mix variance. Okay. So we're looking at our standard cost for the mix, material mix variance, and we're looking at our wet ingredients. And then we also want to know what is our standard mix. And our standard mix is then combined the 120 plus 180, that gives you 300. So then I know that wet is 40% and dry is 60% of my input. And that is my standard mix. Okay. So when I do come to this calculation, I want to go to the, okay. So like we've said, from the scenario, we've taken the actual issued 145 and 210, and we add that together. So that's my wet and dry. Together, that is 355,000. Then I move that actual issued quantity over to my actual issued in standard mix. So now I want to see if I stuck to the mix that I was supposed to stick to, how much would I have used of each? Okay, because we know now that she didn't use the eggs and the flour in the right proportions. So we want to see if she did stick to the right mix, how far off is she from what she used or input to what she was supposed to input. So we take that 355 and we then split it 40% per this standard mix goes to wet, and 60% of the dry, 60% of the 355, the 60% is then the dry. So based on that, you'll see she used unfavorable, so she used more actual of the wet ingredients than she was supposed to. So if you look at the actual, it's 145, the wet is 142, so she used 3,000 more eggs. And then that means she used 3,000 less of the dry. Okay. So combined, yes, that does give us a favorable variance, but you have to look at the impact that this change had on the yield in combination to know if it was a good idea for her to play with the ratios between wet and dry. Okay, and then like we said, we then use the standard cost to determine that. Okay. Okay, so then we say yes, she has used more of the cheaper one and less of the expensive one, but perhaps she had to use more of the wet because of the poor quality. Okay. So you never get away with using poor quality. Okay. I'm going to then quickly go to the, is there questions on the mix? Let's do that. Yes, Naledi, please go ahead.
Just a silly question, ma'am. What are the chances, with standard costing, it's either you need to know how to convert kgs into grams, centimeters into meters. What are the chances of being given that 1 kg is equivalent to 1,000 grams? Or you must just know?
I believe at CTA level you should know that. Unfortunately or fortunately, I think that is something that you will need to know. In this question, I don't think it was a problem. There was no need for converting grams to kilograms. but that is something that we do expect you to know. I'm not sure if we keep it anymore, but we do have a document that was historically available that you could study the matrices. So if you do have a difficulty with the matrices, maybe you can just send us an email and tell us that you're struggling with them, so we can maybe give you a summary and then you can study those.
Okay, thank you.
Pleasure. All right. Okay, now the next part that we're going to look at is sorry, yes. Yes, please go ahead. I'm not sure if I'm pronouncing it correctly. Now I've lost your name. Sorry, please go ahead.
Hi, ma'am. How are you?
I'm well, and yourself?
Good. A quick one, man. When it comes to the standard course, the mix part, do you perhaps have a better way of understanding it? Because I always confuse, more especially when I've got to convert that the actual in standard. I always get confused when it comes to that part, and it's not like I haven't been practicing it. I practice, but when I've got to apply it in actual scenarios, it becomes a problem for me. Is there any way that I can master this part so that like it becomes like something that I know going forward, like, because now I feel like somehow I'm cramming it. It always confuses me, to be honest.
Okay, so when I take you back to this information, okay, so the actual the actual kilograms issued to production, this 145 and the 210, you were given this, okay? So that is what you're going to put into this table here. Then you're going to add it up. So this is the steps that you'll do. You'll add them up. Then you add them up and you see it's 355. Okay, do you see that?
Yes.
Okay. Then now I'm going to use this actual kilogram issued. Now the same 355, I'm going to carry this total over to the second column.
Okay.
Okay, now what I'm doing is I'm just splitting them into my standard mix, 40% and 60%, because it's got to still be my actual kilograms issued. So I'm taking my actual kilograms issued, the 355, and now I'm just going to split them between wet and dry, because I'm putting the actual kilograms into the standard mix. But you'll see this table that we've got here, the 142,000 and the 213,000, this exact table we're going to use in the yield variance as well. So you can then just use this, copy it again for the next calculation. So you take then the 355, you divide it per the standard mix, and that is how you do it. Okay. Because we want to see how did she mess up with the ratio between wet and dry. Because she did 145. 145 over 355. So she had almost a 41:59 ratio instead of the 40:60 ratio. So that's what she did. We want to see what is the impact of her doing her own ratio for this actual mix. Okay.
Okay, ma'am.
Okay, if you still don't understand, please feel free to send me an email about it.
I'll do so, ma'am. I'll do so because I need to master it. Like.
Okay. I think afterwards also go through this again and do the steps that I explained.
Okay, ma'am.
Okay. All right.
Ma'am, can I please also pitch in with one last question on this?
Yes.
Ma'am, the standard mix there is 40 and 60%, which is okay. And then the wet ingredients that were used, the actual used wet ingredients is 145,000. And
Yes.
then according to the standard mix, what should have been used is 142,000.
Yes, for the weight.
Yes, ma'am.
Yes.
Yes, ma'am. Okay. Now, my logic here was that since you've used more than what you were supposed to use in terms of ingredients,
for weight,
then that is adverse. That is an adverse variance. Okay.
Yes.
But then I read somewhere, and then I was confused by the what is written there under step 2, that determine if more kilograms of the expensive raw material were used in production. So my question is, ma'am, to determine whether this is an adverse or this is a good adverse, or what is the other, the opposite?
Yes, favorable.
Yes, favorable. To determine whether this is adverse or favorable, is it important whether the ingredient we are looking at was the expensive one or the cheap one, or is it about the usage of the ingredients, which is more important?
I understand. Okay, so to determine, the first thing that you'll then determine, if I look at weight, is you'll see I actually issued 145, which is more than my 142. Okay. Immediately by looking at the quantities, I used more weight than I was supposed to use. That makes
so I wasted ingredients there.
I used too much.
I understand that.
Yes.
Yes.
But where it comes in, you'll see both have a variance of 3,000, you see. So now I've used less, I've used too much of the weight, making it adverse, but I've used less of the dry. Okay. So why we're talking about the cheap one and the expensive one is when you look at overall, because of the price variance, I end up with a favorable variance. You see, I'm adding the 15 is negative, the 75 is favorable, in total 60,000 favorable. Okay. But it's also going to then impact on, because she has messed up the mix ratio, that's also going to impact on my quality of my product. And that especially you'll see in the next part. So what it tells you is, in this question, is buying cheap eggs of poor quality messes up everything. But we'll get to that. But yeah, so be sure to buy good quality products and not cheap products of poor quality.
Ma'am, I just want to be sure once more, ma'am.
Yes.
I do understand that using more resources than you are supposed to use is an inefficiency, so which makes it an adverse situation.
Yes.
If you've used more than what you are supposed to use, that means you are not efficient in the use of your resources. So that is an adverse situation. So it's an adverse variable. And then if you were supposed in the dry ingredients, you were supposed to use 213,000 according to the standard, but you have used 210. So you've used less of that ingredient than you're supposed to use according to. So that is a favorable situation. That's a favorable variance.
Yes.
And then now, if you mix the adverse, if you add the adverse and the favorable, then obviously the favorable is more. So the overall total will be a favorable variable. I understand that line of thinking. Now, what I'm asking is that does the price of the ingredients that are being used also need to be taken into consideration now, or what is important is the efficiency with which I've used the ingredients or the resources?
So
because I'm thinking here, ma'am, that we are looking at this is basically the standard. I mean, the yield and the volume, the material mix variance and the material yield variances are sub-variances of the volume variance.
Yes.
Right, ma'am? So I'm
Yes.
thinking here that this is not a price variance as such, and the actual rent value that we are using here is the standard, the standard, that is the standard price, not the actual price. So I'm thinking that I'm supposed to be concentrating more on the quantities to determine whether this is favorable or adverse. So now, do I also need to take into consideration whether it was cheap or it was not cheap to work out if this is favorable or unfavorable, or that does not really talk into the favorable or adverse part of these variances?
So the favorable or adverse is determined through the variance in terms of the quantity, okay? But
Yes.
for example,
Yes,
if wet was the expensive one of 25,000, okay? Let's say wet was then 25, then that adverse would have been negative 75, okay? And then dry would have been 5, and that favorable would have been only 15. Then my total variance would be 60,000 adverse. So that's where the price comes in. So if the direction, or if this one was the more expensive one, then my overall variance would have been adverse 60,000. So you can't leave the cost out, but you do use the quantity to determine the variance, but then you use the standard cost to determine the total. And then that combined total will tell me if my mix variance is favorable or adverse.
Okay, thank you very much, ma'am.
Okay, pleasure. If you still have a question, you're also welcome to send an email on this.
Yes, ma'am. Yes, ma'am. Thank you so much.
Pleasure. Okay. Okay, let's go then to that. Now, the next part that we're going to look at is the yield. Okay, so remember we told you that we've got a normal loss of 2%. Okay, so that means if I want, for example, if I put in 1 kilogram, if I want an output of 1 kilogram, I'm going to have to put in 1,02 kilograms to get my 1 kilogram, just to cover. It's not, this was rounded off, so it's not just the 2%. So you take the 1 divided by 0.98 to determine how much input I would have required to get, for example, 1 kilogram of output. Okay. But we'll do that now. Okay. So remember I told you this, this table stays exactly, this table stays exactly the same. Okay, the actual kilograms issued in standard BICs, the 142, the 213, which was the 355 that we split 40-60. Okay, so that table stays exactly the same. Okay, then to get 1 kilogram of output, because we know there's a normal loss of 2%, we divide the 1 with 0.98. Okay, you can't just add the 2%. It looks like this in this question, but you'll see there is a rounding difference there. And in another question, if it wasn't 2%, it would have been quite different. Okay, so you take the 1 and divide it by 0.98, and that tells you, if you want an output of 1 kilogram muffin, you're going to have to put in 1,0204816 kilograms of input. Okay, so that's just important to know, because remember we said then this is my normal loss, and my normal loss I incorporate into my standard. Okay. Okay, so in this question, we told you that we produced and sold 320,000 bags. Okay, so 320,000 bags, remember that. Okay. There we go again, sorry, 320,000 bags. Okay. Then this 320,000 bags, if I divide it by 0.98, I'm going to see I have to have an input of 326 in 530 in total, okay, to get to 320 because I'm going to have a normal loss. Okay, so I basically took the 320,000 and I divided by 0.98. Then I split it into 60% and 40% to get the 130,612 and 195,918. Okay. So now, based on my my actual input required for my actual output of 326, I've split it 40-60, and I'm comparing it to the actual issued in the standard mix. Okay, so for wet ingredients, I can see I used more of the wet ingredients, and therefore it's adverse. And then for the dry ingredients, I used more of the dry ingredients, therefore it's also adverse. Okay, and then I multiplied with my standard cost per kilogram. So what's important here is when you're looking at your yield is it looks at how much did I have to put in to get to my actual output. Okay. So when I look at this question, I can see that my poor quality of eggs has actually caused a lot of wastage in my end product, okay, because I used 355 kilograms of ingredients where I was supposed to only use 326,530. So I've used quite a bit more. And the biggest reason that I could find is that it's likely due to the poor quality of eggs, that I had to use more eggs. I had to have more production runs. I had to clean the machine. I had to reset the machine. So the staff became demotivated. So there's a lot of things caused by using inferior quality. So you can just imagine the taste of the muffins won't be the same. Likely it didn't pass the quality test, so they had to redo it again. Then we also didn't train Ms. Baloy in this regard. She has to go for training. And we have to put in place policies to ensure that our staff or managers don't just change suppliers. There has to be some policy to follow, and that if there's unethical behavior, that it should be reported. So overall, Ms. Baloy's performance wasn't good because the material variances were adverse if you look at all of them combined. Okay. Is there questions at this stage?
Hello, ma'am.
Yes.
I just have a quick question with the practical application. I think it becomes a challenge for me just to understand why there's a mix variance versus a yield variance in real life, like when it would be relevant. I think I'm still missing that part of this. So I'm still doing it as a calculation, but I don't really understand it in terms of practical applications.
Okay, so for me, the mix has to do with how the eggs and things are going in what ratios they are going in, what ratios my eggs. So if you're baking a cake, I'm looking at what is the impact of using an extra egg, okay, or and then too little flour, for example. Okay, now my yield is looking at, I've got a normal loss of 2%, but in actual fact, for an example, I've lost 4%. So what I'm trying to say is that not only did it take me, let's say, I then divide by 0.96. So to put in, so 1 divided by 0.96, if I add a normal loss of 4%, then I would need 1,0416, okay, input. So I'm requiring more. So somewhere I'm wasting, as I'm going to the oven, I'm dropping some of my mix, for example, and I'm dropping more mix, or there's more cake batter staying behind in the pan than I've anticipated. So that second part has to do with my yield. If there's more of the cake batter, for example, stuck to my pan, that is causing me a bigger loss than what I expected. That is then my abnormal loss, and that means that I have to get more dough to get this cake the same size as before.
Okay, so now the yield that you expect to get, how did you get to that point? Did you now bake 20 cakes and then you, on average, you know you're supposed to get a yield of so much, and then you base it on that if you have more or less?
Yes. So, for example, you would have had a, well, if it's your first time, you would have done some market research on that to determine what the case may be. And then your standards, you would then set at based on your experience, maybe from the previous year, but you wouldn't take into consideration if there was exceptions to that. You would just take into consideration your normal loss. So normally, over the years of experience, you've seen this much cake batter get lost. So you would then base your standard on that at the beginning of the period.
I hear you. All right. Thanks so much.
It's a pleasure. Yes, I see there's a hand raised.
Hello, ma'am.
Please come ahead.
Yes, ma'am. Can I please, ma'am, can I come in?
Yes,
May I go
apologies.
in first, Mehlo? My hand was up.
Apiwe, you can go ahead.
Okay,
Ma'am,
thank
please
you.
go back to the, thank you, Mehlo. I can't see your full name. Pardons for that. Please go back to the slide about yield, ma'am.
Yes.
All right. So are we saying here that when we're looking at the yield, we're looking at the ingredients that we put in versus what we got out of it? For example, with this muffin business, we were supposed to get more out of what we put in, out of the 255 total here. Okay, let's drop that. But I'm trying to understand what the yield is for, apart from memorizing it as a formula. And I'm not quite getting it.
Okay, so we know that we've got 320,000 bags that we actually produced, okay?
Yes, ma'am.
And we know that we've got a normal loss of 2%, okay? So then we divide it by 0.98 to know how much we should have put in to get to that 320,000.
Oh.
Which is then that's 326,000. So like I explained to the previous student, so I can't just put 320,000 in because I know there's some cake batter going to be stuck to my pan, for example. So
Yes.
I need a little bit extra, and that is my 326.
Okay.
So now I'm allocating that. So I've got the actual that I've used on my production floor. I've input into my machines. I've put 355,000. Okay. But now I know I only produced 320,000 of these things. Okay. But now I have to compare my input because I'm comparing my ingredients. So I have to know how much ingredients would have been needed to get to 320 if I didn't have an abnormal loss. So if I just lost the 2% that I was supposed to, I could have just used 326,000 of my combined ingredients. But in actual fact, I used 355. And that is much more. I actually issued more product, ingredients than I needed if my calculation was correct based on my 2% normal loss. So now I definitely have a problem because I am wasting it somehow.
All right.
Does
All right.
that help?
I'll send you an email. We're getting somewhere, but I'll send you an email.
All right. All right.
Thank you.
Yeah.
Thank
Pleasure.
you.
Pleasure. Sorry, can the other student please go, or did I answer your question as well?
No, not really, ma'am.
Okay,
Ma'am,
please go ahead.
I think, yes, ma'am. I think I was fortunate that at some point after reading this so many times, I actually understood what the yield variance is all about, even though I still could not calculate it straight enough. But this is what I understood of it, and this is what the strategy that I came up with to actually make sense of it. Basically, what is happening here is that I ask myself, what is the quantity of ingredients that was issued? So it is 355,000.
Yes.
And then I ask myself, and then what is the normal loss? The normal loss is 2%.
Yes.
So it means these 355,000 ingredients that were issued, some of them will be lost. So I have to subtract that 2% from 355. So then it means that the expected output in standard mix would have been 347,900, ma'am.
Yes, I'm listening. There's more than one way of doing this calculation. So you can.
But if for understanding it, ma'am, just for understanding it before you try the various ways of calculating it. For understanding it, it says here that the actual ingredients that were issued was 355,000, but it is expected that the output will not be 355. At least 2% will be lost. Before we even look at the output, we should know that there will be a normal loss of 2%.
You can do it that way, but then you would have to adjust your standard price as well. So I think then you're looking at it from the other perspective, which is possible, but I know for standard costing, there is very several alternatives available. So yes, you can do that, but then you have to make sure that at the end of the day, that you're, if you're doing it from another perspective, that you do come to the same amount at the end of the day. Because this wet and dry ingredients quantity that we're looking at here, the 142 and the 213, those cost me 5 Rand and 25 Rand respectively. So if I'm going to adjust it at that level of the quantity, then I will have to adjust the price as well. So you are welcome to do it in another manner. I think in the solution that is available online, I think there is alternative methods of calculating it. I just chose the one that I think is the easiest one for you to use. But you are welcome to use another method as long as it comes to the same final conclusion.
All right, ma'am. But the basics of it is that we are basically looking at the amount that should have been produced given the ingredients, less the amount that is actually produced.
So in this method that this question is set up, we're looking at, so we know the output would be, I'm going to just in simple terms say it's 320,000 cakes. But to get 320,000 cakes, I had to put in enough batter for that normal loss. So I put in 326,530 to get to that 320 cakes. But that was just what was supposed to happen for 320 cakes. Now I'm going to see, but actually I even put in a lot more products than of wet and dry ingredients. It even added up to 355, which far exceeds the 326. But yes, what I suggest is then have a look at maybe the alternatives. And then I think you'll see that, yes, you can have different amounts for at different places. But at the end of the day, if you adjust it in one place, you'll have to adjust. If you adjust the quantity, then you'll have to adjust the amount. But at the end of the day, it has to come to the same final answer of 483,979. But I think I suggest have a look at the different alternatives. Maybe one of them follows your same thinking pattern.
All right, thank you.
Okay, and if it doesn't, please come back and send me an email on that.
All right, thank you.
Okay, thanks.
Ma'am, can I just ask another quick question?
You've muted yourself.
You can go ahead.
I just wanted to find out, so with all the various ways that the same question can be asked, is there the specific principles when it comes to mixed yield and then the other variances? Most of the time when we are looking at questions, will the inputs that will be provided, must we look at it from the actual, because sometimes I've seen that there are variances that they ask from how much you inputted, and then sometimes you are given what the outcome of units are, and then you have to now do the calculation. So I just wanted to kind of come to what principles we must be able to be foundation, and then where the variances can come in from there.
I think in most cases, yes, like I said, standard costing has a lot of alternatives. So my suggestion is that I always like to follow the method that I'm showing you today, but another lecturer or another student may find a different alternative, works better for them. But I think that you'll have to make out for yourself by doing a couple of the questions and seeing what are maybe the different alternatives and which one speaks to you, which one do you actually understand better. So there's just as long as you're not, like I said, if you're going to adjust the quantity, then you have to adjust the standard price. You can't adjust the one without the other. They have to speak to each other. So if you,
so
yes?
just to add more meat to this, what I mean is, you see in this question, if they said output requires 300 cupcakes instead of giving, or 1 million cupcakes instead of giving you 1 million kgs, would you have had to then first convert it to kgs, or would you have then used, where you have kg now in that blue column, would you have then used the units?
Well, in terms of your ingredients, you would have had to use your kilograms. Yes, you'd still have to use your kilograms for that. So perhaps if you're thinking of an alternative question that I'm not aware of, or maybe you can send me an email on that specific question, please.
Okay. All right.
Right.
Thank you.
There. Okay. Just want to see quickly. Okay. I'm quickly going to run us through. We're almost out of time. So what I'm quickly just going to do is, this is just an ABC kind of question. So this is just, in this question, it just basically asks you, would ABC, activity-based costing, apply to RU? Then in this case, we'd see, okay, when does ABC apply? We don't just want you to give us the theory, but you need to think and apply to the scenario. So in this case, there is a lot of competition. We tell you that in the scenario. We also see from the question that RU has a lot of fixed overhead, and they've got a diverse product range, and there's different cost drivers. It's not just your traditional cost drivers like labor hour that applies here. So that makes it that ABC is appropriate for RU, but you can just revise this in your own time, please. Then just quickly transfer pricing. We've got our minimum transfer price and we've got our maximum transfer price. So our minimum transfer price is looking at incremental cost plus opportunity cost. But this opportunity cost is only if there's a sacrificed sales that is going to occur. Then we've got an external market as our maximum price. Then we're going to use for the external markets, we're going to use the market price less saving on, for example, selling and transport expenses. If there's no external market, so they can't sell to someone outside of the company, we're going to look at our variable cost, but we'll also add a profit. We're going to then limit or have a maximum for this profit, and that can't exceed what the receiving division will be getting for the sale of these goods. And then always remember that your final price will be negotiated. Okay. So in this question, I'm just going to briefly tell you about it. We're going to, let me just open the required, discuss the transfer price critically, because each division has suggested another transfer price. So this question is a discussion type of question. Other questions that you will have may be to calculate the transfer price. In this question, Sponge is the division that is selling. So they want the highest price of 28 Rand and 90 cents because they want to make a profit and they also want to achieve their bonuses. So at an return on investment of 22%, they will get bonuses. That's why they want it to be 28 Rand 90. The muffin division and the cookie division will be receiving the dough from the sponge division. So the muffin said, okay, full cost plus 18% markup. So full cost is your variable and fixed cost plus then your 18% markup. Cookie, he's a bit stingy. He says marginal cost only. Okay, so which one should we go for, or why are these incorrect? So when we're looking at what Sponge suggests, he suggests 28 Rand 90. But in the question, we saw that we can externally buy this raw dough at 28 Rand. So definitely muffin and cookie would not buy from Sponge if they sell it to them at a higher price. They would then go and buy it from the market at 28 Rand. So the very maximum price is 28 Rand for a bag, because otherwise we just go externally. And then we'll even have to deduct some savings as if there are. Okay, muffin and cookie, I think both of them would be happy with the lowest rate of 20 Rand and 10 cents, because that would mean that they'd be able to get a bonus at the end of the day, because they can then add their profit on there, and that will help them to achieve their targets. But that would also then demotivate the staff of the sponge division, because they are not making any profit at all. So you can then also argue that maybe sponge shouldn't be treated as a profit center. Maybe they should be treated as a cost center instead. Remember that the marginal cost of 20 Rand and 10 cents will then also ignore the fixed cost. And in the long term, we need to make sure that RU does cover all of its fixed cost. So maybe the marginal cost is not the best for RU as a group combined. Muffin, I think he's got the most reasonable suggestion, because in his case, he does add a profit. So I think Sponge would be happy because they do get a portion of profit, and it covers the full cost. So it covers the fixed cost and it covers the variable cost. Okay. But should there be spare capacity in the sponge division, we should maybe then in those cases consider taking the marginal cost for that spare capacity, because they do have it available. Otherwise, they would just reject it, and it could ultimately bring some benefit to the group. Okay, is there any questions on this transfer price?
Ask a question.
Please go ahead.
So I was doing 2 questions today on transfer pricing, and I just wanted to know, to me, that it didn't look like there was any difference in the wording, really, but there was a difference in the calculation. Regarding the minimum transfer price, the one question said that they would save on transport and marketing costs, and then the variable that we deducted that from said direct production costs, or it wasn't deducted from direct production costs when I was doing the calculation. But then another activity also said, let me just find it here. It also said will lead to a saving on distribution costs, but then it did deduct this from what they called variable manufacturing costs. So I just want to know, does variable manufacturing costs mean that the selling and distribution cost is included, and direct production cost means that it's not included? Because there were 2 different calculations. Or how do we know when to deduct it?
I had a discussion with Ms. Venter earlier today about this. In 2 of the questions, I think it is 6.3 and 6.4, it's treated the same, but I think the confusion is, was it 6.2, that it's, like you said, it incorporates it into manufacturing. And I think that wording there was a bit confusing. So I think what I will suggest that we do, because that is confusing, is maybe I'll put it then online, or where the question is. I'll do an update, and you can just send me an email, and then I'll send you that clarification email on that. I think it was a bit
Thank you.
Yes, misleading in the information, or unclear in that regard. So yes, please do send us an email, and then I'll send that to you. And also then on the material, I think we need to do something to make it more clear.
Sure.
Pleasure. Okay, thank you so much for joining this evening session. I wish you all the best for studying for test 2. And you would have seen that the information is available, or the downloads of your study material for learning unit 5 to 7 for test 2 is available under additional resources and also under each of the learning units on My UNISA. So do make sure that you do work through that content. I've also added for you as prior learning and additional questions. I've added this rise up question there under additional resources. I've also added for you tutorial letter 102 of MAC4 861, and I've also added for you questions from MAC4 861 that is additional questions if that you are maybe struggling with something or you want to work out another question on something, or there's just some extra additional practice questions for you to go to either now or before the exam. You are welcome to go to that. That is under the prior learning and additional questions or under additional resources on My UNISA. Thank you for the way in which you asked questions and participated in this evening's lecture. If you do have more questions, please feel free to send us an email about your questions. And we are looking forward to seeing you again for our test 2 question and answer section. We will, thank you, Luke. We will send you an email shortly with the arrangements for that session. I think we've initially scheduled it for the 1st of April. First was 1st of May, but we're trying to move that because it's a public holiday. So we'll come back to you on that. Thank you so much, everyone. I hope you have a fantastic evening and work hard. Continue your dedication this evening for showing up for this session. Shows that you are committed, and we are glad to be your lecturers and we are glad to help you. You are welcome to ask us any questions. Thank you. Thanks, everyone. Have a lovely evening.